For years, India's economy was powered by consumption. But now, a new engine seems to be picking up speed: investment-led growth. The government's capital expenditure, which is basically the government's investment in long-term assets such as roads, highways, bridges, etc., had grown from 3.3 lakh crore rupees in financial year 20 to over 8 lakh crore rupees in financial year 24. That's a significant jump, and it may be laying the groundwork for more sustained long-term momentum in building the nation's infrastructure. From roads to railways to defense and digital infra, India might be entering a new build phase, and some investors are starting to take note. Chapter 1. The government leads from the front. This isn't just about policy headlines, it's about visible action. Road capex increased from 57,595 crore rupees in financial year 20 to 2,03,763 crore rupees in financial year 24. Railways saw spending grow from 58,028 crore rupees in financial year 20 to 1,87,436 crore rupees in financial year 24. National highway construction reached 13,327 kilometers in financial year 23 compared to 10,885 kilometers in financial year 19. Even defense and affordable housing received larger allocations. The focus appears to be on assets that can improve the economic growth in the long run. Chapter 2. Laying the ground for private investment. Another point to be noted is that higher public sector spending might also be encouraging private sector companies to increase their investments. This has led to companies' debt levels being more manageable, non-performing assets or NPAs declining, and initiatives like the Production-Linked Incentives or PLI scheme and Make in India gradually creating a more supportive environment for manufacturing. In financial year 24, 59% of all new project announcements were in manufacturing, which may indicate a slow but steady pickup in private capex. Chapter 3. Who could benefit? Some companies seem well positioned to benefit from this shift. Infrastructure firms that have seen more orders coming in, capital goods, power, logistics, and rail tech segments are seeing increased interest. Even cement, housing, and construction businesses are participating in the uptrend. For investors looking at long-term themes, this shift from consumption to investment-led growth might offer a new lens. ICICI Prudential's sectoral or thematic schemes may help capture such structural trends, because sometimes building quietly creates the biggest impact over time. Like, share, and subscribe for more such investing stories.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.